not going anywhere in trade ever since the opening, so just at that 5,800 mark.
To a bigger stock, out with results tomorrow morning. Infosys, it's been a very big outperformer. The sector has been since November last year. Sandeep Muthangi of IIFL Institutional Equities joins in to tell us what he thinks might be offered tomorrow. Sandeep, morning. Thanks for joining in. What is your expectation for tomorrow?
Morning, Udayan. Thanks for having me. Infosys, we believe, will have the best result of the season in this quarter. If you look at the quarter, there are a few peculiarities associated with it. First is you'll have lesser working days because of the Christmas holidays. And again, this quarter, the currency has appreciated by a lot. So you have about 3 percentage points headwind on the margins because of the currency. But that said, we believe if you discount the lesser working days, this quarter should be as strong or as good as that of the last quarter. In terms of numbers, we expect about 6.5% dollar revenue growth for Infosys, and because the rupee has appreciated a bit, you get about 3% rupee revenue growth, 3.5%. And on the margins front, thankfully after a few quarters, the wage pressures will not be there in this quarter. So we believe the margin should be fairly good. And despite the appreciation of the rupee, the margins should improve marginally for Infosys. So broadly speaking, that's what we expect.
Hi Sandeep, morning. So in terms of their guidance, do you expect them to up it both in terms of growth and what they do on their EPS?
See, we are already, after this quarter, we shall already be 3 quarters into the year. So guidance for the full year, we expect it to be upgraded marginally, but you have to realize that there is just 1 quarter to go. And the outperformance of this quarter will get figured in, so you'll have a marginal upgrade of about 1 to 2%.
So what's your 12-month price target on this stock, Sandeep?
Well, there's been a lot of rally in the larger IT services firms, and Infosys has been performing very well over the past over this quarter actually. That said, the demand environment for IT services is very strong. And you have to realize that second quarter is usually a seasonal best for the IT services companies in terms of ramp-ups and new project wins and things like that. But what we are saying is this time around, even the third quarter is going to be as good as the second quarter in terms of the actual demand environment. So despite the rally and despite the valuations going to about 20x PE levels, we expect that the earnings growth will be very strong. And if you look at Infosys, they even have a tax tailwind going onwards. So we expect the performance of Infosys to be fairly decent even going forward. So about a 10-15% kind of an upside from even the current levels.
So Sandeep, if they end this year with say something like 120, 122 rupees earnings per share, which looks very likely, but on the back of that in FY12, how much can they stretch it? I mean, could it be 25% earnings growth? Could they get to something close to 160 rupees per share?
So let's analyze the growth for next year. So what are the factors? The first one is the volumes and the pricing growth. We expect the revenue growth will be fairly strong. So if you look at my estimates, the revenue growth, we are looking at about 25% kind of a revenue growth. And on the margins, there are a few headwinds because of the wages. But again, the hiring engine is back on track, so you'll have some benefits from the pyramid and operational leverage and things like that. So margins, broadly speaking, they should be fairly constant. So if the currency doesn't play spoil sport, the EBITDA growth should also be of the 25% odd levels. And now let's come down to the profits. There you have a tax tailwind. This year, Infosys is hitting 26% tax rates. Next year, we have a bit of a headwind because of STPI hitting the sunset clause, but almost all of STPIs of Infosys have already hit the sunset clause. The incremental growth, once it comes from SEZ, should result in a bit of a tax tailwind. So if it's broadly a 25% revenue growth and a 25% EBITDA growth, you should have a bit more than 25% of profit growth. So my estimates are about 155 rupees of EPS for next year, which is broadly consistent with the arguments that I've just told.
Given that kind of growth and which might actually play through without too much of risk, do you think Infosys and the entire IT sector continue to hold that broad outperformance that we've seen for the last 3-4 months?
Well, if you look at our company, we are having IT as one of our top sectors for 2011. Couple of factors actually benefiting IT. One is the US market is recovering fairly fast, and you would have read the unemployment numbers. They fell to 9.4%, better than what people were expecting. So the US recovery is continuing to happen, which is very good for Indian IT services firms. And also on the wage front, as I've told, the arguments are fairly good. So because of the US market recovery, we expect the demand conditions to be fairly strong and not much of a margin worry for the larger IT players. The other thing that I think will also happen is with respect to the performance of the mid-cap IT services vendors also. They're trading at a big valuation discount, and if you look at 2010, their underperformance versus the large caps has been fairly strong. Some of them had underperformed by nearly 50%, stock prices have underperformed by nearly 50 percentage points. And if you look at the margins, some of their margins had collapsed by about 1,000 percentage points, that is 1,000 basis points, that is about 10 percentage points. So going forward, we expect a couple of things to happen even with the mid-cap IT vendors. One is the revenue growth rates would start catching up with that of the larger vendors because the discretionary environment is so strong. And on the margin front, because they've collapsed so much and because the wage worries are kind of abating at least for the next 1 or 2 quarters, their margin performance may be better than that of some of the larger IT vendors. So we expect that some of the best returns in Indian IT can be made through mid-cap IT vendors for the next 1 to 2 quarters. But sector as a whole, it's one of our company's top picks also.
Those were pictures, by the way, that you were seeing from the vibrant Gujarat event. A lot of India Inc. is expected to be represented there. 2 faces from there, Anil Ambani and Adi Godrej. Mukesh Ambani also expected to be present at the event. We'll get you snippets from what they've been talking about. Sandeep, that's an interesting point you're making about mid-cap. So on the basis of that argument, which ones would you say are primed to spike back or fight back the hardest this year?
It's not more of a fight back, but it's just capturing the opportunity. The demand environment is so strong, and once the discretionary services once the demand for discretionary services start increasing, then mid-cap IT vendors will start benefiting as much as the larger IT vendors. So if you look at my coverage universe, we've recently upgraded Infotech to a buy, and that is our top pick in the mid-cap IT space. So we continue to be favorably inclined towards Infotech and Infinite Computers.
There are some reports this morning, though, Sandeep, suggesting that even though Infosys will perform, it's beginning to struggle again on the pricing front. Are you picking that up as well?
We are still not back to a very good growth environment. So arguments on a pricing increase will be very weak. We have, it is very good that there are no more price cuts. That's the best we can expect at this point of time. But going forward, because the discretionary IT services like ERP and consulting come at a better pricing than the other IT services, on an average basis, Infosys pricing could improve just because it has a higher exposure to discretionary IT services. So I think that is a trend which you'll see happening, in the near term. But as you go into the next year, even this year, you've seen the COLA adjustments kicking back in. So you'll get about 0.5% to 0.7 to 0.8 percentage points kind of a pricing benefit, just because they're indexed to the inflation and there are automatic price increases clauses that set in. But with the newer contracts, companies are aggressively pushing for price increases, and the demand environment is also benign. So going into FY12, maybe by June, September, you should see some pricing increases coming in because of organic conditions also. But I don't expect much pricing increases, in the first quarter per se.
Thanks, Sandeep. Appreciate your time as always. Thanks for speaking to us today. That's the IIFL view. They're bullish on Infosys, bullish on the sector, and expect good things from the large cap from Bangalore tomorrow. We'll take a break, come back, 57.90 on the Nifty, consolidating the gains of the morning.